Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, an immediate countering bullish harami on Friday, though it can also be seen as an indecisive spinning top. This comes after the previous session's combined bearish harami and bearish closing black Maribosa. The market uses as a base the lesser Fibonacci line at 106.1313 with the nearby dark blue highlighted middle time, currently 105.54, of the late December 2023 to mid-March 2024 bearish Andrews pitchfork in attendance. Looking topside, prices approached but did not test the bright red highlighted middle time, currently 107.08 of the bearish shift pitchfork for the same move as the bearish Andrews pitchfork. The significant April 2020 low at 107.25 was just above that. Now, on the surface, 2 weeks ago we had a keen and dramatic move lower that ended up as a weekly key reversal down. And not just that, but an immediate countering weekly key reversal down after the previous week's weekly key reversal up. So quite a dramatic show of bearish strength. However, this was not all, as when I collated the key reversals in the various markets I cover over that weekend, I found we had a total of 20 currency pairings which had immediate weekly key reversals last week, during that week, and a majority of them, 11 pairings, were countering weekly key reversals. And all of them, and I even include the ones on the crosses, all of them were US dollar positive or seen to be US dollar positive. This is something I do not recall ever seeing before, and it made me and makes me now even concerned, not because they are all one way dollar positive, that's not it, but that an immediate countering key reversal, weekly or otherwise, is not always constructive in the way it shows at face value, as in dollar positive here. Too many times I've seen this as an indication of a troubled market with indecision, not just on the daily scale, but here on a weekly scale. I'm not saying to discount the dollar positive, but to watch out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. Now, going back to the market, we now have a large amount of overhanging ammunition overhead, stretching from mid-November last year until 2 weeks ago. Now, I had also previously pointed out the bearish bow tie formation made on Tuesday last week. The theory behind this suggests two things. Firstly, look to which way the moving averages move after crossover to indicate the next direction, which in this case we can see is downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it will be between the 30th of April and the 6th of May, so watch out. Finally, and I have repeated this often over the last 2 weeks, please pay attention to the crossover of the times circled on or about the 26th of April and the 9th of May. Around and usually a very, very short time after, one may see volatility. So far today, a small move higher, but not much. Cable, aka sterling against the US dollar. A second bearish black crow on Friday after the previous session's immediate countering bearish dark cloud cover pattern. It was a new low and low close, not seen since mid-November last year. Below, we now have the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, with the June 2020 low at 122.48 below that. Meanwhile, on top we have a lesser Fibonacci line at 124.60, but there seems a little little of note until the declining long moving average was currently up at 125.60. On the surface, 2 weeks ago saw a keen and dramatic move lower, but there is more as we ended that week with a weekly key reversal down. And not just any weekly key reversal down, but an immediate countering weekly key reversal down after the previous week's weekly key reversal up. So quite a dramatic show of bearish strength. However, this still was not all, as when I collated the weekly key reversals in the various markets I covered that weekend, I found we had a total of 20 currency pairings that had weekly key reversals last week, and the majority of them, 11 pairings, or last week that time, a majority of them, 11 pairings, were immediate countering weekly key reversals. And all of them, and I even include the ones on the crosses, were US dollar positive, or seem to be US dollar positive. This is something I do not recall ever seeing before, and it makes me concerned. Not because they are all one way, dollar positive, not that, but an immediate countering key reversal, weekly or otherwise, is not always constructive, in a way that it shows on face value, as in dollar positive here. Too many times I've seen this as an indication of a troubled market with indecision, not just on a daily scale, but here on a weekly scale. I'm not saying to discount the dollar positive, but to wash out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. Finally, I previously pointed out the bearish bow tie formation made by the moving averages 3 weeks ago. The theory behind this suggests two things. Firstly, to see which way the moving averages move after crossover, to indicate the next direction, which we can see here is downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it would be between the 26th of April and the 3rd of May, so watch out. So far today, a small move lower, but still a new low not seen since mid-November last year. Euro sterling. A strong, long, counter-to-the-counter bullish engulfing pattern on Friday, if only just, after the previous session's immediate countering bearish harami. However, that was not all, as last week turned out to be a weekly key reversal up. The market based itself on the rising short medium moving average, currently at 85.53, and punched up and closed over over the following resistances that are now supports, and that's the dark blue highlighted upper time, currently at 85.61 of the November to December 2023 bearish shift pitch hawk, the flatlining medium moving average, currently 85.73, and the flatlining long moving average, currently 86.05. This was all quite a move upwards, and now threatens to break the dark blue highlighted November to December 2023 bearish shift pitch hawk. However, prices are still within the purple highlighted late January to date expanding wedge pattern, currently 85.37 to 86.42. As indeed, the upper trend line is the next resistance overhead from the April 2020 low 86.69, some distance further up. Now, so far today, a dip down to the flatlining long moving average, which has held so far, and moving higher to make fresh recent highs. US dollar against the Japanese yen. A dragonfly doji pattern on Friday, usually seen as a bullish pattern, let me get that right. Coming after the previous session's hanging man pattern, that was also a bullish harami, if only just. It was a further test and close over the bright red highlighted middle time, currently at 154.60 of the July to December 2023 bullish Andrews pitchfork. Now further up is the June 1990 high at 155.78, whereas below we have little in the way until the old October 2022 to November 2023 and recent March April lows in the 151.90 to 152 even zone. Overall, we are obviously still within the bright red highlighted pitchfork, but we are also still within the large purple highlighted February 2022 to January 2023 bullish shift pitchfork. In between the middle time overhead, currently at 159.61, and the lower time below, currently 145.55. So far today, a move higher, but as yet not breaking last week's high. Come awfully closer, but not broken last week's high, which is at 154.78, and the market has dipped back down to the bright red middle time on occasion. USD against the CNH, the offshore Chinese yuan. An indecisive doji cross on Friday with a long tongue on top that reached up to the dark blue highlighted broken lower trendline extension, currently at 726.25 of the dark blue highlighted ascending triangle pattern, before pulling back. Now below is the dark blue upper trend line. It's a weird way. The lower trend line is above, the upper trend line is below, but that's the way it is with extensions. Below is the dark blue upper trend line, currently at 723.78 of this same pattern, with the long moving average and the short medium moving average is just below, currently 723.25 and 722.64 respectively. Now 2 weeks ago we saw a weekly key reversal up, so quite a dramatic show in bullish strength. However, this still was not all, as when I collated the weekly key reversals in the various markets I covered this past Sunday night, I found that we had a total of 20 currency pairings that had weekly key reversals last week, and all of them, and even include the ones on the crosses, were US dollar positive, or seem to be US dollar positive. This is something I do not recall ever seeing before, and it makes me concerned. Not because they are all one way, dollar positive, but they are. But the majority of the ones I saw were immediate countering weekly key reversals up, and an immediate countering key reversal, weekly or otherwise, is not always constructive in the way it shows at face value, as in dollar positive here. Too many times I've seen this as an indication of a troubled market with indecision, not just on a daily scale, but here on a weekly scale. I'm not saying to discount the dollar positive, but to watch out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. All of this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all, as though I do not show it here on this chart. There were also monthly key reversals up for March in USD CNY, the spot onshore Chinese yuan, plus monthly key reversals up in March for the USD CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if we have any follow-ons. And this is where the rub is, as 2 weeks ago we saw not just a weekly reversal up in spot USD CNH, but also in USD CNY, the onshore Chinese yuan, the 1 month NDF, as well as the 1 year NDF. Altogether, actually, it's quite an achievement. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. That's the primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed now, but for the moment I'll keep those targets on my daily chart, as we've already had a false break lower, and more recently we look like possibly a false break higher as well, so I will still keep them on for now. But I'm happy to retire them in a heartbeat at the right move. Now, also mindful of the potentials topside from the recent move higher. So, for good order's sake, I have marked for now a primary target X2 topside for the continuing move higher at 730.05, and a secondary much harder to reach target X3 up at 732.80. So far right now, slightly lower open before a move higher, though it is only small right now and is well within Friday's range. US dollar against the Mexican peso, an extraordinary piece of action on Friday that ultimately ended up as an indecisive spinning top with a very, very, very long tongue on top. This coming after the previous session managed an immediate countering bullish engulfing pattern that punched up through the March 2016 low at 1709.23, the dark blue highlighted upper time, currently 711.07 of the December 2023 to January 2024 mildly bearish shift pitch walk, as well as the long moving average, currently 1716.54. Yet despite this huge move higher, the market failed to close over any of these resistances. Extraordinary behavior. However, the action was set up the opportunity for April to be a possible monthly key reversal. Thus, if we close on Tuesday night, the 30th of April, So it's close of business Tuesday night, 30th of April, either over 704.90 or under 1653.10, then we'd be one. Anything in between would have ourselves a lesser outside month. Now, right now we're looking at a monthly key reversal up. We're breaching actually and moving into an outside month. There's the market for you, moving backwards and forwards. Now, so far today, a higher open, then a dip below the April 2016 low at 1703.89, but not going below last Friday's low in the 1700 zone. And now the market has risen to look to test the combination of the March 2016 high and a breach dark blue upper time, but then come back down again. And we're below the April and March 2016 lows, sorry.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.